ready.
And there you go. Take it away, Jim.
All right. Hey, everyone. Thanks for hopping on this evening's webinar. My name is Jim Dubois. Those that know me, it's no secret that I've always been drawn to brilliant thinkers who redefine what's possible. And when it comes to numbers, well, I got to tell you, I'm super excited to introduce you to Chad Gagnon. He's the CEO of BlueSkies Bookkeeping. He's a numbers man through and through, and a master at bookkeeping, something every one of us needs to dial in our own respective companies. And BlueSkies, I've had the familiarity with knowing Chad since last year. What they do is they specialize in bookkeeping for home service businesses like mine, like yours. And that's important, especially when you're aligning yourself with the right people that make up your team, right? Whether it's the attorney, the accountant, also a bookkeeping company, you want those that understand our business model. So they are experts when it comes to industry benchmarking. They're experts at categorization of income and expenses, and obviously monthly profit and loss statements and so much more. So I think the big part to this that should be a takeaway for all of those that are listening is most businesses, they fail because of one thing. They don't watch their numbers. So I am thrilled to have the opportunity to have Chad share some of his wisdom, his expertise with you when it comes to numbers. And I think you're going to get so much out of this here this evening. Take it away, Chad.
Thank you very much, Jim. And I'm very happy to be here to talk to you guys a little bit about unlocking the power of your numbers. And Jim, that was a great intro and I appreciate it. And yes, Jim and I have known each other for a little while now, since last year. I'm with BlueSkies Bookkeeping. I'm the CEO. I've been with BlueSkies since October of last year, with the goal of taking BlueSkies to a whole other level. We see the value of being able to provide bookkeeping services for companies like yourself and really helping you understand your financial position, understanding your numbers, understanding your business, helping you be able to grow and thrive through your bookkeeping, through understanding your business. We want to help businesses like yourselves so much. And with bookkeeping services through BlueSkies, we're able to do that for you. So with that, what does BlueSkies do exactly? So we provide bookkeeping, simple CFO, and CPA services to the home services industry. We like to say that our niche, our specific market is the home services industry. That is our specialty. That's where we've had a lot of success. We understand the businesses in the space, whether it's window washing, whether it's landscaping, whether it's home cleaning. We specialize in the home services space, and we like to think that we add a lot of value. And so when we work with our clients, we really like to specialize, in a specific space where we can bring as much value as possible. An overview of what we're going to talk about today. The first thing that we are going to do is we are going to understand your financial position. So we're going to go through a series of questions, and you guys will answer those questions to yourself, and you'll come up with a score. And based on your score, that'll be determined as your financial position with your company, and we'll talk about a little bit of what that means and what you can do. Next, we're going to understand your P&L. And then we're going to go through some planning and budgeting ideas and way to look at your business and talk a little bit about what that means and how it can help you. So with that, understanding your financial position. I'm going to ask a series of questions. This is the first one. And you will count a score of 1 point, a half a point, or 0 points. So if you answer yes to the question, give yourself a point. If you answer like kind of, maybe, give yourself a half a point. And if the answer is no, 0 points. And we'll add them up in the end. And so my first question to everybody here is, I or you clearly understand the financial position of my company. Give yourself 1 if it's a yes, half a point if it's kind of, or 0 for no. Next question. I clearly understand the top 3 issues facing my business. 1, yes, half for kind of, 0, no. I understand what's not a major financial issue. I have a plan of action dealing with those top 3 issues. My financial information is delivered to me in a simple to understand way. I am clear on what a great reporting package looks like. My financial information arrives to me at the same time each month in the same format. I can complete my monthly financial review quickly in less than 15 minutes. I make decisions based off of my financial information. So how did you score? Most companies would come in between 4 and 6. I would say excellent companies, thriving companies would be more along the lines of 7 or 8. And I'm really curious, and feel free to share your scores in the chat. I'm curious where everybody kind of falls. And it's really important to understand your financial position. It's really important to address these questions because this is how you should be looking at your business on a monthly basis. And I'm going to go through some of the things that I see are very simple ways of taking the financial information that you receive that you should get on a monthly basis to better understand your business, to easily understand the things that are impacting your business. I'm seeing some of the scores come through. We got an 8, we got a 0.5, we have 4, 4-ish. So thank you for sharing those. It's important that you understand where you are at with your business when understanding it financially. And let's now go through and talk through some of the aspects and how you should look at that information. So first, understanding your P&L. P&L is made up really of 5 sections. The first section, net sales revenue. Revenue, reading a definition, the total amount of money earned from selling goods or services before any expenses are deducted. The next big piece of the P&L, COGS. The direct costs incurred to produce or deliver the goods and services sold by a business. So basically, this is your labor. Gross profit. The amount of revenue remaining after subtracting the cost of goods sold, representing the profit from the core business activities. So if you were to remove all expenses, all overhead, and just had your labor of producing the services, this would be your COGS, and then the difference is your gross profit. Operating expenses or overhead. The costs associated with running the day-to-day operations of your business, excluding the cost of goods sold. This is your overhead. This would be your admin or admin services. This would be your marketing and advertising expenses. And lastly, net income or profit. The total earnings of a business after deducting all expenses, taxes, and interest from revenue. So this is your profit. Probably people like to think this is the most important number at the end of the day, your bottom line. And so it's very simple, right? You have your net sales, you have your COGS, you have your gross profit margin, you have your overhead, you have your total expenses and net income. I mean, at the easiest form, this is what it should look like. You know, you have your 38% COGS, that puts your gross profit at 62%, total overhead at 43%. That all produces a net income of 18%. You know, a very simple way of looking at numbers just like this. However, we all know it's not that easy. This is an example of a business straight out of QuickBooks. And this is what a lot of you actually see and look at on a monthly basis, or, you know, when you're trying to make decisions, and it's very, very difficult. You have a bunch of numbers on a sheet categorized in a bunch of different ways. And it's very difficult for everyone here, even myself, when I'm looking at numbers, to really understand a business and make decisions this way. And so you need to keep it simple. And that is the theme here. If there's any takeaway from this discussion, this webinar, it's you gotta keep it simple with your business, and you gotta keep it simple with your numbers. And so you all just got a good idea of your financial position and how you look at your business with those scores. Now let's dive into some examples of how we can keep it simple when we're looking at the numbers of our business. So right here is an example of net sales, just a chart, net sales month by month, just for a typical year, January through December. And you can see net sales bounces around probably like any other business. But right off the bat, you throw a trend line on there, green line. And it's just, it's showing that your revenue is trending up. That's great. I can see that with my business. Everything is great. I'm growing within the year. It's awesome. Trend line going up, revenue growth. Now, what about the thing right in the middle? You got a dip here. Revenue was as high as 100,000 in a month, and then it dipped all the way. You had 2 straight months of revenue decline. Okay. The year looks great. You grew. It's awesome. But why did this happen? Why did we have negative growth in the middle of the year from May through July or August? What happened? Do you actually, when you look at numbers with your business, do you actually ask the question of why this happened, why we experienced this, and what you can do to drive, instead of negative growth over 2 months in the heart of the year, what can you do next year to avoid this situation? And this, all we're doing is plotting numbers on a graph and having a simple conversation based on the numbers that we see. Asking why. Next, a little more here. We got the same revenue trend, same numbers, but then we insert our COGS as a percentage on top of it. And so we see 2 lines here. We got the same revenue growth. We get the same dip in the middle of the year, and then we have our COGS percentage. So let's point some things out. Something positive here. Our revenue jumped from March to April, which is great. But something else happened in here with our COGS. Our COGS went down. So our revenue went up, but our COGS dropped as a percent of revenue. That means we gained some efficiency here. So it costs us less to produce more revenue. That's a great thing. But do you ask yourself, why that happened? Or do you point it out when you're looking at your numbers? And the reason why you're asking yourself why is because you gained efficiency there. So what changed? What worked? What happened that allowed you to spend less to produce more service? Another thing to point out here, when we experienced the revenue dip in August, in this example, the COGS actually went up. So it costs us more to produce less of a service. So we had efficiency lost here. So what happened in the month of August that cost us to spend more to produce the service when our revenue was actually going down, which means that our orders were probably going down? Do we ask ourselves why? Why did we have efficiency loss in this month? There are answers when you start asking yourself why, and you look at your numbers this way in a very simple form. There are answers there. And when you start asking the question why and you start looking, it will be very, very easy for you to find those answers. Another example, we have revenue, same revenue trend, and then we have our overhead or total expenses, fixed and variable, which is the yellow line. So same revenue trend. Let's take a look here. So our revenue, when it dipped in July and August, so did our overhead. So that means as our revenue went down, our expenses went down. This is great. We saved some margin here. We saved some dollars. We saved some money. That's awesome. Why did that happen? What did we do to reduce our expenses in August? Next thing I'd like to point out, with the revenue towards the end of the year, it went down from October, November, and December. At the same time, our expenses went up. So as our revenue was going down, our expenses were actually increasing. So we lost some money there. We lost some margin. What were we spending money on when maybe we should have looked at it a little differently or invested elsewhere. Just again, a different way of looking at the information that is being provided for you. And all it takes is just simple graphs and simple way of just looking at it and seeing the trends. And most importantly, why? Why was something the way that it was? Why did we spend more money when our revenue was going down? What did we do to save on our expenses when our revenue was going down? So things to look out for, the why. Always ask why. When something is the way that it is, why did it happen? There's answers in there that are going to help you understand your business a lot better. They're going to help you make better decisions, and they're going to help you in the long run grow and scale your business. To be a little bit more specific, you need to make sure that you're categorizing your expenses properly. When you don't do this, then they can pop up in other areas of your P&L and then throw off your numbers. So you have to make sure that your categorization is spot on, and bookkeeping is obviously something that can really help you with that. Not recording small expenses. The small expenses can really add up and impact your numbers. It's really important to know every single dollar that is going in and out of your business. And then benchmarking and comparing yourself to the industry standard, which is something that we will dive into right now. So COGS as a comparison, window cleaning industry. So everybody or most people here are in the window washing, window cleaning industry. COGS as a benchmark in this industry is right around 45%. And so this is a cool tool that BlueSkies provides in our bookkeeping services, but we are able to compare your business with other window washing companies in the industry. And so we know that the industry standard is 45% COGS when it comes to window washing. And so in this example, comparing your business to the industry standard, you can see that your company is actually running around 41%. It costs you less to produce your service than most companies in your industry, which means more profit, and you're operating at a higher mark than a lot of your peers, a lot of other companies in the space. And that's important to know. That really, really is. Another example, this is a home cleaning example. And so in the home cleaning industry, the benchmark for COGS, because it's very service heavy, is 60%. In this example, the company is running around 41%. It costs this company significantly less to produce the same service than most of their competitors. And so this is an interesting example, because you would think that maybe you're performing a lot better if you were a home cleaning company than the industry standard or most of your competitors. But the truth is that maybe you're not spending enough, and maybe you are not providing the best experience for your clients, for your customers. And so maybe you're not paying your labor enough. And because of that, it'll trickle down to client facing issues. And maybe you'll have a retention problem because of that. So even looking at benchmarking this way is very important, because it allows you to compare yourself to the industry standard and see where you come in and see how your business is performing. And in this case, maybe you need to look at it a little differently. Maybe you're not providing the service that you want because, your COGS are a little on the lower end. Again, asking yourself why something is the way that it is. Another example with overhead comparison in landscaping industry, that benchmark is 30%. In this example, the company is running like around 42% with their overhead. So the company spends significantly more than their competitors, less profit. So understanding your industry ultimately will help your bottom line. We are getting some questions, or there's questions coming through the chat. And I don't know if we want to address those. We'll keep going and we'll address some of these questions at the end. So benchmarking is a very important tool when you're running your business, to see how you compare, specifically with window washing, see how you can compare in the industry with your competitors. Planning and budgeting. So we talked about your financial position. We talked about your P&L. We talked about looking at numbers in a very, very, very simple way. Let's look forward in planning and budgeting and what it means to understand your business and where you want to take it. So I ask everyone a question here. Where do you want to be? Where do you want your business to be in 3 years? And I don't want you don't necessarily need to chat your answer or anything like that. But it's a question you should be asking yourself, because a lot of you are probably sitting there wondering, where do you want to take your business? Have you ever thought about where you want your business to be in 3 years? Do you want to increase revenue enough to be able to sell it in 3 years? Do you maybe just want to keep your business where it's at? If you're running $2 million a year in annual revenue, maybe that's good enough for you. Maybe in 3 years, you'll be happy to just continue to do $2 million in revenue each year. You'll never know unless you ask yourself this question. But if you want to take it to the next level, you want to grow and scale your business, maybe you're running $500,000 in annual revenue right now, and in 3 years, you want to get it to 2 million. But you're not going to get yourself to 2 million unless you answer this question first. Where do I want to be in 3 years, and accept the fact that that's where you want to be, and what are you going to do about it? What is your plan for 2025? Do you have a budget right now for 2025? Do you know where you want your business to be at the end of this year? Do you know what revenue mark you want to be at? What are you doing right now to get your business to that place? If it's $1 million in revenue at the end of the year and you just came out of 2024 at 500,000, what are you doing differently? What is your plan to get yourself to $1 million? These are questions that you should be asking yourself when you're planning and budgeting your business for 2025 and even to 2028. You need to plan ahead. You need to budget for growth. So with that, in 3 years, let's say you want to be at $2 million in revenue. Maybe you want to have 20% profit margin. This sounds nice. What are the big initiatives and goals that will get you to $2 million in 3 years? Have you wrote those out? What are the 3, 5, maybe 7 big initiatives that are there that are going to get you to $2 million and 20% profit margin in 3 years? Write those out. Put them down, stare at them every single day, stare at them once a week, talk about them, discuss them with your team. What is it going to take to get you to this mark in 3 years? Same question, to get to 2 million in 1 year. $1 million, to get to 1 million in 1 year is what it should say. $1 million in revenue, 15% margin. What are the big initiatives and goals that will get you to 1 million in 1 year? Have you laid those out? Have you wrote those down? Do you stare at them every single day? Maybe there's 4, 5, or 6 big initiatives, big goals that you need to tackle this year. Maybe it's buying a truck. Maybe it's buying all new equipment. Maybe it's buying out a competitor. What does that look like? What are the big initiatives this year that are going to get you to whatever revenue mark that you're trying to achieve by the end of this year? Did you lay those out? Do you talk about those with your team on a quarterly basis? So build a plan. Document your 3-year goal or goals. Plan out your 1-year goals. You should talk about these on a quarter-by-quarter basis. What do you need in order to reach these goals? What does your team need to do? Maybe they have some initiatives of their own. Maybe they have some hurdles. Maybe there are some roadblocks that live in there that if you didn't bring up these goals, you'll never know about those roadblocks without getting to your team and talking to your team about them. What is it going to cost to get to these goals? Obviously buying a truck, new equipment, or even buying out a competitor, that comes at a cost. So what is it going to take in terms of a cost to make that happen? And when will you pay? Obviously with cash flow, that's very important when you're looking forward as well. So you gotta build a budget. If you're going to look forward, if you're going to look 3 years down the road, 1 year down the road, you got to be able to build a budget for it. You need to forecast your sales. So $2 million in 3 years, you should forecast your sales month by month for the next 3 years to be able to get you there. What does that do? That backs into the activities that you're going to have to execute on in order to be able to get to that $2 million mark. But the only way you're going to figure out how many activities and what it's going to take is by actually forecasting your sales out. You need to forecast your COGS out. How can you gain some efficiencies with your labor to be able to hit those sales marks, to be able to produce the gross profit necessary in order for you to actually make some of those big ticket expenses like buying the truck, buying the equipment, or buying a competitor. Plan out your expenses, very important. Expenses are easily talked about in terms of making cuts and things like that, but you have to actually really plan out your expenses on a month-by-month basis in terms of, what are you spending your money on? Advertising and marketing is a big, big, big one. Plan out those expenses so you know how much you're going to spend on advertising and marketing, and then actually talking about it and asking why when you look at those expenses, if they're working, if they're actually working, specifically with marketing and advertising, all by month and by category. And so this is kind of like a simple view that I created. January, February, and March, simple view, forecasting out revenue, forecasting out your COGS, your overhead, and doing this month by month for 3 years. It sounds kind of crazy to look 3 years ahead, but there's a saying, what you focus on expands. And so if you don't talk about it, you don't think about it, you don't actually document it and put it out there, then are you focused on it enough to be able to hit that mark, whatever that mark is? And the beauty of it is that when you start going through this budgeting and forecasting process, and you start working and getting closer to your goal, whatever your goal is, you'll actually see it start happening, because it's going to force conversations. It's going to force, hey, we need to spend money on this. Do we have money for it? It's going to be like, in 3 months from now, we have to plan on buying that truck, or our sales activities are down. We have to get our sales activities up so we can hit our revenue mark in March or whatever month it is. So forecasting and budgeting looking forward is very important in order for you to be able to achieve your goals in 3 years or 1 year or whatever the time frame is. Forecasting cash flow. So when you look at your company in the future, it's not just about forecasting and budgeting for expenses and COGS and sales and whatnot. You have to actually look at your cash flow plan, because we've all been in situations where cash can be a struggle. And so when you plan that out, your plan for 3 years or 1 year, you have to look at your cash position at the same time. How much cash will you have in the bank by month? And you got to plan for your dips, because you will. Because when you buy that truck, the equipment, buy out a competitor, whatever it is, that takes cash, and you got to plan for those dips. And so another good, simple example, forecasting out your cash flow. Obviously, we have a big dip in here. So what can you do to avoid a situation like this? Because when you look forward in the future and you project that you're going to be losing money in 6 months, what are you going to do to avoid that situation, or to pad it so you can still do things like pay your expenses, pay your bills, pay your employees? You have to plan for this stuff. So to summarize, 3-year picture, always be looking ahead. I like to look at, I've been associated with many businesses in the past, and every single one, always looking 3 years ahead. Even when I'm 1 year into it, I'm always looking 3 years ahead. I always have a 1-year plan. Typically, you break that down quarterly. So if you want to get to $1 million in revenue, this is just one example. You break it down quarter by quarter. What needs to happen in Q1 to get to $1 million in revenue at the end of the year? What needs to happen in Q2, Q3? What is it going to take? What is the plan to get to that mark? Budget your plan. In the simple view that I shared, and I have a budget template that I can share with all of you following this call. You got to budget for your plan. You got to budget your sales, your COGS, your expenses, and your cash flow, and forecast that out. Know your cash position at all times. Adjust accordingly as you're working through. And if you would like to learn more, come talk to us. Schedule a demo with us. You can go to yourblueskies.com and schedule a demo. Be more than happy to meet with you. Janelle, our bookkeeping expert at BlueSkies too. We'd be more than happy to meet with you to talk a little bit more about your business, understand your business, how bookkeeping can help, a little bit more about looking ahead, 3 years, 1 year, what it means to have a forecast and a budget in place. We want to be able to help you. We've been in the home services industry and small businesses. We've been surrounded by small businesses for a very long time. In my career, I've been in small, medium-sized businesses for the past 20 years. So very familiar. have a lot of experience when it comes to bookkeeping, budgeting, forecasting, and would love to chat with you, learn about your position, your situation, your business, and how we might be able to help. With that, I know a lot of questions came through. Jim, can you help me with addressing some of those questions?
Absolutely, absolutely. This is just awesome stuff, Chad. Awesome stuff. It just takes me back into the day where I didn't really know my numbers, didn't really understand my numbers. We can talk more about that in a second, if you like. But yeah, right here with you.
So let's see here. It looks like does COGS include payroll taxes, insurance, workers' comp? Good question. It depends on, if your employees are in your labor, and these are people that are actually out in the field, then yes. If they're employees that are in-house, admin, marketing coordinators, seats, like those types of seats, no. What other questions do we have? I saw a lot come through. If you have any questions right now, feel free to please chat a question.
I can tell you, Chad, when I go back in time, I kept a journal. They were called data write books, and nothing like what you presented at all. But it was still a little bit of a measurement of money in, money out, and kind of what was left over at the end of the month. But it was just all hand done in this data write book that I had. But it still gave me a bearing. And a lot of people, they kind of just go off of gut and what's in the bank account. And yeah, my early days with done right window cleaning back when I was in my 20s, that's exactly how I did it. I didn't measure any of this stuff. But I can tell you, for those that are really looking to scale, really looking to generate as much profit as you possibly can out of your company, everything that Chad is talking about, it's essential. And I urge you to hire a company. If you can't manage your books yourself, or you can't get to it, or you don't have the time, or you keep pushing it off, Chad's the man with this stuff. He'll dial it in. But I'll tell you, the beauty of seeing these graphs come alive and the trending, and then the Q&A that comes out of it, that's where the gold is, because it does make you make decisions. It does make you start putting attention on spend or profit, and what you need to do to find more profit or cut costs in order to maximize your profit. So this is exciting for me to see this.
Thank you, Jim. One point that I didn't necessarily make that I think is very, very important. Well, obviously in any business, but it really pertains well to this space. Pricing is important when you look at your numbers, because that's sales, that's revenue coming in. And an example of, like, let's say you're actually not charging enough when it comes to your services. Well, that's going to impact your numbers. It's going to impact your COGS. It's going to impact your COGS as a percent of revenue. It's going to impact your expenses as a percent of revenue. And, maybe you're in a situation where you're not charging enough. I'm not saying that everyone should go back and, jack up your prices, but that's something that that should really be understood. And you should look at your competition when it comes to that. You should look at what's happening in your market, in your industry, really understand your pricing, because that can impact a lot as well too. Patrick asked, just got QuickBooks and just adding everything I spend on there. How do I add sales to know where I am at? To answer that question, I would love for you to set up a demo. Go to yourblueskies.com, no obligation, nothing. Go to yourblueskies.com, set up a demo with Janelle. She will be more than happy to walk you through those setup features in QuickBooks. I'm going to be honest, like, that's the best next step for you. Please, we will be able to help. No obligation, nothing. In a simple call, we'll be able to help you with that.
I'll add to that too, Chad. It's, again, when you can see it live, and hats off to you, Patrick, for getting QuickBooks. And just be sure to not use the QuickBooks templated version of a P&L and chart of accounts. Definitely use what Chad and Janelle have created there, mirroring what we do in our industry. That's going to be probably number one right there, so that the numbers begin to make sense. But anytime one's looking to break these numbers down, pull out more profit, I call it widening the gap, right? You've got cost and you've got revenue. The mission is to widen the gap so that you have more revenue than you have cost, because in between, in that gap is where the profit is. Many ways to do that, but it starts by really getting a handle on that profit and loss statement. Would you agree with that, Chad? That kind of makes sense on your end? You're the master.
I'm the master. No, yeah, you said it very, very well. I like widening the gap. I love that expression, that explanation. Jim, I got a question for you. Put you on the spot a little bit. You ready?
I'm ready. Do the best I can.
If you could give one piece of financial advice to everyone here, what would it be? And I ask you that because, a lot of people that are on this webinar in your industry, which is, you've been in this space for a very long time. What's one piece of financial advice that you would give everyone here?
That's a great question. Wow, let me think about this for a second. So if I go back in time, if I go back to April, May, and June of 2012, that was a game changer for my company. I hired this guy, Rick Stolzenberg. He was like you, a financial guy. And he brought, like you did tonight, he brought the understanding of the importance to numbers, measuring the numbers, profit, margins, COGS, gross margins. I never heard of any of that stuff. And it came alive for me. I paid him a ton of money. It was $10,000 over 3 months. And he came in the office on a very regular basis during that time, but it really dialed this stuff in. So one piece of advice is get that person that can review those numbers with you on a regular basis, like BlueSkies. And that's not a plug. I know how invaluable it was for Squeegee Pros to have this person walk into our office and sit down and help us build out the chart of accounts and build out the QuickBooks, and then be able to give us an understanding of what those numbers actually meant. I didn't know. It was just literally over my head. And it wasn't even that long ago when I think about it. It was 2012. And one thing happened. The numbers just went up, because now it's like I had a dashboard that I could pay attention to. So that would be one thing. The other thing, if there's a piece of advice, since you kind of got me on the spot here, is to don't mix business and pleasure. So many do that. Don't do it. It's not about the write-off. You don't want to get yourself in trouble. Do it by the book. Do it legitimately, because you don't know what your exit plan is going to be down the road, and that'll come up and catch up with you if you don't. The other third piece of advice, and that'll be my last one, is watching your costs as aggressively as you possibly can. And Christina, I think she's on here as well tonight. She is also a master at that. Keeping our costs as low as we can. We're always shopping. We're always looking to negotiate with the vendor. It comes down to this. If you've got this money coming in and this money going out, you have no profit. But when you bring your cost down and you bring that revenue up, that's where the magic is right in between there. That's why I like to use those words, widen the gap. That's your focus. You're not going to be able to do that if you have nothing to measure. When you've got Chad and his team, in this example, watching and studying and working with you, you then have an opportunity to make this start to happen.
Thank you, Jim. That was very well put. Does this fit into the profit first method? Yes. Profit first is, so you got to start somewhere, right? A lot of people will start with sales, top line, and then they'll work their way down, forecasting out their COGS and their expenses and whatnot. And then that produces, a profit margin there, whatever that is. Profit first is doing the reverse. So you start with whatever profit margin you want in your business, and then you work your way down from there, figure out expenses, and then what kind of sales you need in order to produce the profit that you are needing, or that you're planning on, or that as a part of your plan, 1 year, 3 year, whatever it is. So it's all the same. It's really just like where you start. In profit first, you're starting with the profit. A lot of businesses, though, they'll look at, what they're producing with revenue, how they might be able to produce revenue, and then back into in their expenses and their COGS, forecast all that out and back into their profit margin. But to answer your question, yes. Let's see.
You don't mind, Chad, I'll add to that a little bit too, because that's a great question. One of the things that I've done in my own personal world is when how we each get a paycheck, and if you're not pulling a paycheck, you should be pulling a paycheck. You're working hard to build your company, pay yourself. But one of the things that I also did, kind of aligning with the profit first method, is the first bill I wrote was to me. I paid myself first. In other words, I took that money, put it in a savings account, sent it off to a mutual fund, put it in the S&P, did something with it so that money could work for me. Profit first, right? I'm working hard. You all are working hard. We're all working hard. We should be paid. And if you're not being paid, all the more reason to study your numbers and figure out what the heck is going on.
Good point. Want to know if you can record. Does this fit the profits for? I'm selling a trailer to buy another truck with it. No more 5,000. I don't know exactly what that means, but let's see. Any other questions?
Christina's made a comment. Go ahead. Patrick's got a question there. And Christina, yeah, you're absolutely right. Limit your debt. So many people, this kind of goes outside business into personal, but it works both ways. If we talk business in a sense, and Chad, I'd love to get your feedback on this too. So many people, in my world, in my company, we've never paid more than $5,000 for a truck or a car in our fleet. We don't have debt. The debt will eat you alive. Like right now, the month of February, right when business is slow, it'll eat you alive because that's a fixed expense on your profit and loss statement. And that carries over. It should carry over into your personal life too. If you've got all these fixed expenses, there's still checks and balances happening at home also. So Christina's right on the point. Limit your debt. Absolutely. Try to pay cash.
Patrick made another point. I need to put myself in payroll. Yes. Pay yourself in payroll. You don't have to avoid distributions altogether, but you don't want to take or just pay yourself through distributions. You're going to eat yourself in taxes. At the end of the day, you will. So make sure that you do pay yourself in payroll. It doesn't have to be full, and you can take distributions at the end of the day, but a lot of people will just pay themselves 100% through distributions. And that's going to not be a good tax situation at the end of the year. So make sure you do pay yourself through payroll. Any other questions? Jim, I'll let you take that one. Your own.
Sounds good. Another big thanks to you guys for everybody that's on here tonight. We're going to be hosting another webinar March 4th, and we're going to flip it to the other side, and something I'm calling the $1 Million Playbook. And I'm going to unveil what I call the owner's manual. And inside this owner's manual, as you can see here, is a roadmap. And the brains behind the roadmap is a genius model. And this is the secret sauce, if you will, to break through the 7-figure mark. 7 figures for you, you might already be at $1 million. Get to 2 million, get to 3 million. So I'm going to break all that down in a 45-minute webinar that Chad and I are going to be putting on March 4th. So mark your calendar on that one there. And Chad, this has been incredible here. I love numbers. I didn't always really understand numbers, but the more you start to understand numbers, at least for me, the more I start to love numbers and what it can do. It's like I always say, you go to the conventions, you get excited about going to the vendor expo and all that. I get more excited now about going to the business classes and understanding the business model and the numbers themselves and what can I learn to make that better and widen that gap. So this has been hugely just fun to be a part of this. And I want to put out a big thank you to you.
I appreciate that. And I thank you for, being here as well. And I thank everyone for joining. Eric asked one question that I want to answer because it's a really good one. What tools other than QuickBooks that helps you bring awareness or put up red flags to avoid pitfalls? QuickBooks, great for bookkeeping. Obviously great for looking at your numbers, necessary tool. But some other tools that you should be very mindful of. One for payroll, Gusto. Gusto is incredible. I'm not sure what, everyone obviously here is using, but Gusto is just a very easy to use payroll platform and for small businesses. And it's awesome. And there are integrations that exist with Gusto. So keep that in mind for payroll solutions. There are a lot of tools out there that do a lot of things. If you noticed in my presentation, I just put some simple graphs together that I just created in Google Sheets. Like that is a great tool. It's very easy. You just plot numbers on a graph and you can easily see the ebbs and flows, the dips, the peaks, the valleys, whatever, like just keeping it that simple. So Excel is a tool, or Google Sheets is a tool that everybody probably has access to here and is extremely valuable. So Gusto for payroll, Excel to really understand your numbers in a very simple manner. Those are two huge tools. If you set up a demo with us, probably talk to you a little bit more or about some other tools depending on your business and where you're at and what you're trying to do, because there's a lot of solutions out there, but those are two of the obvious ones. And with that, HouseCall Pro has payroll too. Yes. With that, Jim, thank you. This was great. I hope everyone really enjoyed this and got value out of it. Go to yourblueskies.com, check us out. Schedule a demo if you want to talk a little bit more. We'll get into your business and how we might be able to help your business. And again, like even if you just want to set a demo and just ask us questions, like we're here to help. We really, really are. So just even if you want some answers to some questions that are driving you nuts or whatever it is, set up a demo, set up a call. We'll talk about it. Thank you guys. Take care.
Thanks everyone.
Bye.